Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 17th of December. All right, a bit of fun and games in that North American session. I've just made a couple of little adjustments to the risk on, risk off page here, just moving the European equities to the top. So just having a look at the US equities, right? The North American session, the epicenter rolls through to obviously Asia and then back up to the European equities. So just having a look here. Pretty neutral day, right? The Dow down 0.15, S&P minis down 0.59, whereas that NASDAQ up 0.57. So, you know, you could sort of say bit half on, bit half off sort of situation. There's a couple of currencies and instruments rocking with the, correlating with the equity markets. Check those out. The gold and the yen. So safe haven play is still sort of in play. But this is quite funny, right? We had the FOMC, so we've got a situation there where equity markets haven't done much, and the market's trying to still work out what the hell the Fed are doing. Now, we had a little blimp up here on the dollar index, and as you'll see here, it was impacted across the board here on all the pairs, right? A little bit of dollars, like a little microcosm of activity. You can see that spike on all the pairs, and they were basically, I mean, you got to take it for what so the dollar spiked. Actually, let me just explain one other thing too here. I've just changed the FX Market Insight page around. So I've got the dollar index at the top. I've added the Swiss yen, got the yen and the CAD. So you can see what the dollar's doing uniformly. And then what we would call the dollar block, euro, sterling, Aussie, Kiwi on the downside. So coming back to what I was just saying there about the Fed, we saw a bit of dollar strength, and it was across the board as they came out and basically said, promised a long-term purchasing of bonds, right? No numbers in sight, nothing else. So there was like a bit of a knee-jerk reaction on the dollar. I mean, it flushed out some probably weak positions on the other pairs. You can see some wild moves here across the board, but no change in trends on anything, just bad price action. That if you were trading short term, you can get really caught up in this. Let me just come back across here, get you the news. It'll make a bit more sense. All right, so just having a look at what it was. Fed vows to buy bonds until it sees substantial economic progress, but no numbers mentioned, right? And that's where you're getting that, oh, that's great, bit of dollar strength, and then, yeah, what does that mean? It's like there's nothing substantial that you can sink your teeth into. The main thing is, and the lawmakers haggle over details as US Congress closes in on a $900 billion COVID aid bill. Now, what would be smart, which obviously politicians aren't in that category, is you get the central bank and the government working together. They come out with a uniform structured stimulus package with the backup from the central bank. You get a great result. In this situation, with politics being the way it is globally, not just in the US, there's a bit of obviously argy-bargy, toing and froing. Everyone wants a cut of the deal. I'll vote for this if you give me that later on, et cetera, et cetera. So they are working towards a deal. That may have some substantial impact in the market. We'll have to wait and see. But until then, that is done. We're still battling away with, this crazy sort of price action that is revolving around these events. Now, the US dollar index, this is the long-term chart. Okay, so down sideways for a period, then now it's broken down on the daily charts. What you see here on the hourly charts is the bit below the chart. You can see where it's going. It's drifting, but the price action, we're having all these little kick-ups where it shoots up. The market is very nervous about the dollar rebounding, and then it slowly sinks back to where it was. So trading is not easy, right? And as I was just showing you there on the major pairs, okay, the dollar uniformly is going down. Well, not so uniformly on dollar yen. It's pretty choppy, but on the other pairs, there's that little blip up in dollar CAD and the dollar block. Well, to me, the rallies are sort of stalling. It's almost like they've had enough. Look at this last month in the Kiwi. It's really finding it tough above 71. It doesn't like sort of sitting up here. And this is, don't forget, a weak dollar works well for the US, gets the economy going. So don't think for a minute that the central bank hasn't got something going here. So let me just come back to our market insight page. overall, the majors are trading okay. Now, we are seeing these knee-jerk reactions around the big events, like obviously the FOMC is major. We have I think it's the Bank of England coming up tonight or today, but we're seeing this seesawing risk on, risk off appetite. Equity markets don't know what they're doing at the moment. Currencies, well, you know what? These trends, the long-term trends are still in play, but short-term status is stalling, right? No one really thinks, is this the end of the dollar or not? We've got this stimulus package coming up. Sterling, we've got the overhanging Brexit issue as well going on. So just keep it tight, keep your capital management tight at the moment and wait for the bigger opportunities. Now, to me, an opportunity that sort of stands out, but you know what? I don't think it may not come into play for a week or two, is the Aussie dollar. It's massively outperforming all other currencies. And I can tell you the economy is on its knees. They're about to pull out January 1st, the first level of all the stimulus packages for all the companies, right? That'll cause a lot of run on bankruptcies. Then you've got all the other JobKeeper stuff being pulled out. I think it's February, March. But the bigger problem with Australia is China, right? China's the biggest export market. China is now adding, they haven't pulled up stumps altogether, but they're adding 200% tariffs on a lot of stuff. They're not taking coal. They're not doing this. It's just going to be a huge economic crunch for Australia, whereas they don't have markets for this stuff, other markets, right? So it's going to be a little bit tough. So the timing of this trade, well, that's the tricky part always. I can see this thing still going up another 100, 150 points before it comes off. I don't care about that. What I'm waiting for is this rally to die, to stall. We see some dollar stimulus or whatever it is, and then it will crash hard. One of the key things about the Aussie dollar is it goes up the stairs and it goes down the escalator. It collapses very quickly, same as the Kiwi. Anyway, that's something to keep in the vault. But for today, I mean, there's not much to do, right? The trends are still there. They're the same thing that's been happening for some time. Price action is sporadic and a bit loose. The trend lines aren't exactly holding. So if you are trading, I'd reduce your trade size if you want to keep banging away through this stuff. There is short-term opportunities, but you know what? It's pretty tough. All right. All the best. Have a good one. Cheerio.